Today we're going to learn how to identify and trade the Cypher pattern. Now this pattern is actually the newest advanced pattern on the market and was founded in-house by us at Trade Empowered. It does complete a little differently than say the Gartley or the BAT pattern, but compared to other advanced patterns it has the highest win rate. It is also very frequent in the market, meaning it'll offer a lot of opportunities on any time frame and any pair. Now, like our other advanced patterns, the first step to identifying our Cypher pattern is identifying an anchor or an impulse leg, which is going to be our X to A move. After this move is identified, then we can move on to our next step, which is identifying the A to B. Now, after the X to A move is created, we'll look for a valid B leg to be completed. The B leg move is considered valid if the candle fulfills at least a 382 retracement from X to A. And remember, by candle I mean the wick of the candle has to at least touch a 382. Now, the B leg is considered invalid either if price action does not hit a 382 or if price action closes beyond the 618 retracement of X to A. So in this case, the wick of the candle can indeed touch the 618 retracement. However, if the candle closes beneath it, or beyond it I should say, then that's going to be an invalid B leg. Next is the B to C move. Once criteria for step 2 is fulfilled, so giving us a valid B leg, we can now look for a C leg. The market creates a valid C leg by the candle and its wick fulfilling at least a 127 Fibonacci extension taken from the X to A leg. Price action doesn't have to close beyond this mark, however it does have to touch it. Now this leg is invalid if either price action does not touch the 127 Fibonacci extension from X to A, or if the candle closes beyond the 1414 Fibonacci extension of X to A. Just like in the B move, the candlestick wick can touch the 1414, it can break the 1414. However, if price action closes above that 1414, then it's an invalid move. Lastly is the D completion. The market forms a successful decompletion point by fulfilling a 786 retracement from the X to C leg. For this completion to be valid, the D leg must exceed the B leg. So let's go ahead and draw this out. Again, the first thing we want to identify is our impulse leg. So our initial impulse or anchor leg, our swing high to swing low in this case. And we're going to label this X to A. I'm then going to take my Fibonacci retracement tool. I'm going to take that from my swing high of X to my swing low of A, and I need a minimum of a 382 retracement in order to get a valid B leg. Now, price action can push up. The candlestick wick can even pass the 618. However, if the candlestick closes above the 618 retracement from X to A, then we have an invalid B leg. So again, the B leg must at least touch 382. So the wick of the candle must at least touch 382, and we cannot close above our 618. After I've identified a valid B leg, I am then going to take my Fibonacci extension tool from my X leg down to my A leg and back up, and I'm going to look for my 127 Fibonacci extension in order to get a valid C leg. Again, in order for the C leg to be valid, price action, the wick of price action, must at least penetrate and touch this 127 Fibonacci extension taken from my X to A move. However, if price action closes beyond the 1414 Fibonacci extension, then this will be an invalid move. The wick of the candle can touch the 1414. The wick of the candle can penetrate 1414. As long as the candle doesn't close beyond this 1414 extension, this is still a valid C move. After getting a valid C leg, I then take my Fibonacci retracement from my X leg all the way down to my C leg. So the entire swing high to swing low of this move, and I look for my 786 Fibonacci retracement to be hit for my decompletion. Now it's very important. If for some reason we were to spike really low, get down here, say price action on the C leg spikes below our 1414, but doesn't close, and for some reason this 786 doesn't complete beyond my B leg, say up here for example, then this would be an invalid pattern. This decompletion has to complete above the B leg. So again, the 786 taken from the Fibonacci retracement of X to C has to complete beyond the B leg to give us a valid cipher pattern. Let's do one more example. Let's check out a bullish cipher pattern. So again, the first thing we identify is our impulse or our anchor leg. We're going to label that X to A for our initial move. I'm going to take my Fibonacci retracement, this time from my swing low to my swing high, my X leg to my A leg, and I'm going to look for a minimum of a 382 retracement to be hit to give me a valid B leg. And remember, price action can touch the 618. The wick can spike past the 618. As long as we don't close beyond the 618 retracement, this is still a valid C leg, or a valid B leg, excuse me. Next thing I'm looking for is my C leg, which is going to come by taking my Fibonacci extension tool, taking the low swing, so my X leg, to the high swing, which is my A leg, and looking for a minimum of 127.2 extension to be hit. Just like in the B leg, price action can push up to the 1414 extension. Price action, the wick of price action can spike beyond it. As long as the candle doesn't close beyond this 1414 Fibonacci extension, then we have a valid C leg. Lastly, I'm going to take my Fibonacci extension tool, or my Fibonacci retracement tool, excuse me, my Fibonacci retracement. I'm going to draw that from my X leg all the way to my C leg. And I'm going to look for the 786 of that entire move for my cipher pattern completion. Okay, so let's take a look around the actual price chart and see if we can identify a few. Like I said, these patterns occur pretty frequently, so it shouldn't be too hard to find some. And looks like I have a small one right here already. Let's zoom in some. Okay, I have my initial impulse leg, X to A. I then want to bring in my Fibonacci retracement tool from my swing high to my swing low. So my X leg to my A leg. You can see we barely hit it, but we just spike up to the 382 retracement, giving me, excuse me, giving me a valid B leg. Next, I want to take my Fibonacci extension tool from my swing high, so my X, to my swing low, my A, and see if we come into a 127 extension. Indeed we do. Let's bring that 1414 extension in just to make sure we don't hit that. You can see price action doesn't come anywhere near it. So I have a valid C leg down here. And for my decompletion, I'm taking my Fibonacci retracement tool, this time from my X leg all the way down to the low of my C leg, and I'm looking for my 127 or my my 786 Fibonacci retracement to be hit for a valid cipher pattern. Now in this case, you can see that price action doesn't turn around right at the 786, and that's expected. It doesn't turn around, stop on a dime each time, but you can see our X leg still holds, and this would have been a profitable pattern. As you can see, the market rolled over. And of course, we'll go over stops and targets later. All right, continue to scroll through. Seeing a bat pattern. I think I see another cipher right here. We almost have a cipher here. I'll draw it out. We're not quite going to get it. You can see we don't come quite to the 786, I don't think. But let's take our initial impulse leg, X to A, swing high to swing low. We'll see if this one works. If not, it'll be good training on still drawing them in. I'm going to take my Fibonacci retracement from my X leg to my A leg. You can see my 3D2 is hit. Price action does not close or even reach the 618. So I have a valid B leg. I then want to take my Fibonacci extension tool, swing that from the high of my X to the low of my A, and back down. You can see we just touched the 127. And again, we don't have to close below it. As long as we touch the 127, that's going to give us a valid C leg. And now for my D completion, I'm taking my Fibonacci retracement from my X leg all the way to my C leg, and I'm looking for a 786 to be hit. And you can see price action doesn't quite make it up there. So we've got the first few legs of a cipher pattern. However, we don't quite get the completion here. Let's see if we can scroll through and find some more. All right, here looks like one. Let's see if you guys can identify it first. All right, we have our initial impulse leg. So our swing low to swing high right here. This is going to be our X to A. We then want to take our Fibonacci retracement from our X leg to our A leg. Make sure we come down into a 382. We do. We just touch it, giving us a valid B leg. We then want to take our Fibonacci extension tool from our X leg to our A leg. Look for a 127. You can see that we do hit and pass the 127. Let's bring in our 1414 Fibonacci extension as well to make sure we don't close above that. And this is a perfect example. You can see price action spikes above it with the candlestick wicks. However, the close of the candle is still below this 1414, making this a valid C leg. Again, we spiked past it, which is fine. As long as we don't break above and close above it, this is still a valid C leg. Lastly, I want to take my Fibonacci retracement tool from my X leg all the way to the high of this C leg, and I'll be looking for a 786 retracement for my cipher pattern completion. And let's see if price action goes down there and gets it. Would have been filled the cipher pattern right there, and boom, the market explodes up. See if we can find one more. And again, I told you these things are pretty frequent. Here looks like a failed one, actually. We have an X to A right here, our anchor leg. We can bring our Fibonacci retracement on, swing low to swing high. You can see this time we spike past the 618, which is fine. As long as we don't close beneath it, it's still valid. Next, I want to take my Fibonacci extension from my X leg to my A leg, back down. You can see we just hit the 127. I'm a little late on my drawings here. We just hit the 127. Get out of there. Giving us a valid C leg. And for our D completion, I'm taking my Fibonacci retracement tool from my X leg all the way to my C leg and looking for the 120, or I keep saying 127, looking for the 786 Fibonacci retracement to be hit. And remember, for this D leg, it has to be beyond our B leg. This is a case where the market would have got us filled, and we probably would have been stopped out on this trade. Let's just see. And we'll go over stops and targets a little later. But let me just see where price action came down into. Yep, probably would have been stopped out. So a good example of a loser, but a valid cipher nonetheless. And remember, guys, just because a pattern loses doesn't mean it's a bad trade. It's a good trade. These things just don't win all the time. Even if you have a pattern like the cipher that say is 75%, 80% right, well, out of 100 trades, you're still going to lose 20 to 15 times. or 20 to 25 times. You got to keep that in mind. Just because a pattern loses doesn't mean you did something wrong. This one's going to be too deep. Let me just see if this works. I don't think so. Yeah, a little too deep there. All right, here goes one. Looks like one at least. And this should be a good example of an ugly one. Now we do have an anchor leg right here. Our X leg to our A leg. We could bring our Fibonacci retracement, and let me draw these in first. And for these ones, I don't expect you to see these at first. These are the harder ones, but it still looks like a valid cipher pattern to me. We're going to have an X leg to an A leg. We're going to take our Fibonacci retracement from swing low of our X to swing high of our A. And we'll see that price action comes into our 3D2 right here. We then channel a bit, never breaking the highs of our A. So this A leg still holds, and then we retrace a little lower. So as long as we retrace a little lower, and again, we're not closing beyond our 618, we're going to have to drag our B leg and follow price action. So originally, our B leg would have been right here. As we consolidate and push down, this becomes our new B leg. We then want to take our Fibonacci extension tool and draw out a Fibonacci extension from X to A. We're going to look for our 127. You can see our 127 comes in right here. Price action obviously breaks it. And let's bring in our 1414 to see if we get a close above it. Again, price action wicks above the 1414, actually touching it 1, 2, 3 times. But if I bring a straight line in, you'll see that we do not close above it, making this still a valid C leg. Lastly, I want to take my Fibonacci retracement tool from the low of my X to the high of my C leg, and we're going to look for that 786 Fibonacci retracement for our D completion and our cipher pattern completion. And you can see price action hits it. We actually spike down a little lower before rolling up for a nice cipher win. Speaking of wins, let's now go on to stops, targets, and entries. Okay, so here's our cipher pattern. Now, our entry level is always going to be exactly at our D leg. So remember, our D leg comes in at a 786 Fibonacci retracement, taking from our X leg to our C leg. This is where we're going to rest our orders at. For stops, stops need to be 10 ticks below this X leg. These are the initial rules. 10 tips below the X leg. If this were reversed, then it would be 10 pips above. Now, something else you may want to try out is, again, like we did with the bat pattern and the Gartley pattern, is take your Fibonacci extension tool, take it from your A leg, back to your X leg, back up, and draw in that 113 Fibonacci inversion. And that will often put you in the same level. Again, the initial rules and the traditional rules are to put them 10 pips below the X leg, but as you get to higher time frames, say the 4-hour charts or the daily charts, sometimes 10 pips just isn't enough. So I advise that you test out, when you do your back testing, taking that Fibonacci extension tool, inverting it, so taking it from the swing high of our A leg down to the swing low of our X leg, and looking for that 113 Fibonacci inversion to put stops underneath. But the key point you need to take in is that stops need to be beyond our X leg. For targets, we're going to take our Fibonacci extension tool. We're going to drag a Fibonacci extension, or a Fibonacci retracement tool, excuse me. We're going to drag our Fibonacci retracement tool from our C leg down to our D leg, and we're going to look for the 3D2 retracement for target 1. and we're going to look for the 618 Fibonacci retracement for target 2. As always, once target 1 is achieved, we want to take our stop loss. We want to bring that up to our break even point. That way we cannot take a loss on the remaining half of our position. So just to recap, stops need to be beyond the X leg. The traditional rules are to put them 10 pips beyond the X leg. However, you may want to test out putting in a 113 Fibonacci inversion from our A leg to our X leg. Targets, we take a Fibonacci retracement from our C leg to our D leg, and we look for the 382 Fibonacci retracement as target 1 and the 618 Fibonacci retracement as target 2. Once target 1 is hit, we want to take our stop loss and bring that up to break even to protect our profits. If we look real quick on actual price chart, here's the last Cypher pattern we drew out. X to A to B, B to C, C to D. In this case, my stops need to go below X, so my stops are down here. Beyond our X leg, we can bring on the 113 Fibonacci inversion and see where that gives us. Right up here. We can then, let's do that, there we go. We can then take our Fibonacci retracement from our C leg to our D leg. And initially, as we enter the trade right here at our 786, our potential profit is going to look like this. Now, as price action pushes down past our original entry, what we need to do is take our Fibonacci retracement and we need to drag that with price action until it completes a new low. What that is going to do is going to adjust our targets simply, and instead of having them up here, we're going to drag them down with the 382. And you'll notice with the Cypher, you don't always get a 1-to-1 risk reward, especially as you go down to the lower time frames, say the 5, the 10, the 15-minute charts. But because the pattern completes and rolls over at such a high level, it is still a profitable pattern even on the lower time frames where the risk to reward ratio may not be the best. Let's look at one more. Find one of the many we identified. This would be a perfect example of a losing one. You can see we spiked down past the 113. So this would have been a loss. And this would have been a perfect one. So again, our entry point would have been right here, right at our 786. Our stops need to be below X. Again, we can take our Fibonacci extension tool. We can draw in a 113 Fibonacci inversion. Which is going to put our stop loss, right about here. You can also do the 10 pip rule, which is going to put your stop loss a little bit lower, but basically in the same area. And you can see that our initial risk is about this much. When we start to analyze targets, we want to take our Fibonacci retracement tool from our C leg down to our D leg, and we're going to look for 382 for target 1. And we're going to look for 618 for target 2. You can see, and we're on a 5-minute chart right now, a little bit less than a 1-to-1 risk reward, but for a pattern that completes 75 to 80%, again, you can do the math. You can have an inverse risk reward ratio and still make plenty of profit. Now, as we see price action plays around near our entry zone, eventually spikes up, hitting our 382 right here. As soon as that 382 is hit, we take our stop loss, we adjust it to our new position size. We want to roll that stop loss to break even, eliminating all potential risk, and we're shooting for target 2 at a 618 retracement. Let's do one more. Again, our entry right at our 786. Our initial stop, either 10 pips above X. X right now is at 131.97, so that would put us at 132.07, which is about here. Or we can take our Fibonacci extension tool, invert it, so take it from the low of A to the high of X. Bring in our 113 Fibonacci extension. I think I clicked the wrong one here. Let's try it again. There we go, this one. And put our stops right above the 32 even handle, right at our 113 extension. So either way, again, when you do your back testing, I recommend testing both of these ways out and seeing which one provides the most efficient way to trade this pattern for you. Now, for initial targets, and let's scroll back some, pretend we're doing this live. Initial targets, we're looking at taking our Fibonacci retracement tool from C to D, and we're looking at an initial reward of about this much. And an initial risk of about this much. So just about a 1-to-1. Yeah, almost exactly a 1-to-1 risk reward on this. However, as price action spikes up, what we have to do is take our Fibonacci retracement and continue to drag it up to the high of price action. And what that's going to do is adjust our targets. Now, instead of looking for target 1 down here, our 382 is a little shorter. So we're looking for our 382 retracement right there. And you can see price action hits it right there. We then take our stop loss, roll that to break even, so we don't lose money on the second half of our position. And in this case, we're stopped out for break even on trail stops, but still get a target 1 winner. So that's the Cypher pattern. Again, it's a little different than the Gartley or the BAT, just in the way it's created, but it is a very, very efficient pattern, completing about 75 to 80%, and that depends on what portfolio you're trading and what time frame you're trading it on. Completes at a little lower percentage on the lower time frames, but overall still a very high win rate. And you'll also notice that it's very frequent in the market, meaning we see a lot of them, and that's very important for a pattern because, well, if we have a pattern that gives us an edge, meaning that we have a statistical advantage to win, well, we want to have as many opportunities to trade that edge as possible. So when you have a pattern that completes very frequently or is seen very frequently in the market, that is great for us because we can continue to put our money in, and as long as we're identifying the patterns the correct way, we should be winning the majority of the time. So, ladies and gentlemen, that's the Cypher pattern for you.